Hey guys, welcome to another video for Business Trade. And yeah, on this video, I want to talk about basically the most common mistakes that I've seen new traders make when they first start trading. And yeah, so let's get to it. So yeah, this will be a very short video. Get, um, we'll talk about three of the most common mistakes I've seen for beginner traders. And yeah, we'll talk about more other mistakes in another video, but this will just be a short one, just an overview per se, right? And yeah, so basically, first mistake that I've seen that a lot of new traders make is that managing your capital when you first start getting into trading. And by what that I mean, let's say you have $100. Okay, you have $100. You've made a decision. You're gonna put it into trading. Okay, the first thing you have to basically this $100 you should be okay with losing. Okay, no one's saying you're gonna lose the $100, but if that $100 was lost in trading, you should be okay. Okay, so don't risk money you don't have or you can't afford to lose. And I know that's a very common advice, but trust me, you have no idea how many times I've seen people, they're beginner traders, and they risk money in trading, money that they can't afford to risk. And yeah, so the thing is that always make sure the capital you're putting into trading, you have to be prepared to be able to live peacefully if you end up losing all that money. Okay, that doesn't mean you'll gamble or anything. Just mean your mindset has to be set up in a way that you're okay if that money is lost in trading. Okay. Cool. And so I guess now it comes down to you know like continuing about this, managing your capital. So basically, the most common mistake related to this is well, yeah, I mean, you should be comfortable with losing that money. A lot of people risk money that they're not comfortable with losing. That's one mistake related to managing your capital. And another mistake is that how do you spread out your capital into chunk size different volume trades, right? And this is where also you'll see a lot of new traders make the mistake. They'll go all in with all their capital in one trade or a few trades. And especially if you're a beginner, that's a big, big no-no because, well, I'll tell you so if I get into trading in a new market, in a new financial market, this is what I'll do. First, I have to get adjusted to the basic dynamics of how the market works, and you're not gonna understand the market just by looking at the chart and doing your statistical analysis. You're only going to understand the market by trading. Okay. There's a saying that one trade is worth 1,000 reports. That's absolutely true. You're only going to learn trading by trading. That's just how it's going to be. So you might as well divide up your capital into small chunks. So if you have $100, the first $50, I'll divide them into $1 chunk. So every trade I'll do will be $1. So I'll have 50 trades and I'll have 50 opportunities to learn, hopefully something new at every trade. And let's say after the first 50 trades, $50, each trade $1, you lose all the 50 trades, but you learn something. That's important. The first 50 trade is not to make money, it's to learn something, it's to understand the market you're getting into. And you'll see what I mean. When you actually trade, you'll be like, okay, this time of the day, the market is behaving like this and stuff like that. You will only learn by trading. You will not be able to learn by looking at the charts and doing analysis. And yeah, after you do 50 trades, let's say you lose the $50, no problem. You have $50 left, right? And what do you do now? Well, the remaining $50, you're going to divide that up into basically five $10 chunk. So the first $50, you divide them up into $1 chunk. You do 50 trades. Let's assume you lose money in the 50 trades, but at least you get to learn something. You understand the market. $50 gone. You have $50 remaining, and you'll divide that $50 into $10 chunks. And by this time, once you have completed the $51 trades, you should understand how to make money in that market. Okay. We'll get into details about how to trade in each market, whether it's Forex, stocks, crypto, and then you have energy markets and commodities. We'll get into that details. Don't worry, but in another video. But yeah, just after the 50 trades of $51 trades, you should have a good idea of how the market works. And then the $50 you have remaining of your capital. The idea is you have now five shots of $10 trades to make up your initial $50 loss of $1 trades that you did. And the reason you divide them into five trades of $10 is because um just in my experience, I found that's the best way to earn back your initial $50 loss. And you can try $5, 10 trades, but in my experience, if you're not gonna make your money $50 back in five $10 trades, you're unlikely to make it back in 10 $5 trades. So yeah. And also after that many trades, you should at least be net positive, right? You should have your initial capital back and some money. And yeah, that's just how I distribute my capital if I'm getting into trading in the beginning. So yeah, that's the first mistake. People they don't understand how to distribute their capital when they first get into trading, how to break it down into separate chunks, right? And what else? Well, another big mistake that people make when they get into trading, which is, and this one, look, I'm guilty of this too. Trust me. I've seen a lot of senior experienced traders because it's a strong habit, which is that once you get on a losing streak, you keep trading. Okay. My rule of thumb is if you have three consecutive losing trades in one day, it doesn't matter. Turn the computer off, go on a walk, go for a walk. That's it. End the day. Doesn't matter if the market starts picking up. Just disconnect completely. If you have three consecutive losing trades, disconnect completely and move on. Okay, that day's over. It wasn't your day. It doesn't matter if the market rises after you close the computer. It doesn't matter. After you turn off the computer, if the market rises, doesn't matter. That wasn't your day. Move on. Okay. And the reason, like the idea behind that is because every bad trade you do, and it brings out more often than not in most traders, it brings out a little bit of uh, desperation, gambling attitude, and higher risk taking attitude. So it, my philosophy is always if you have three consecutive trading losses in one day, just end it for the day, try again next day. That's my philosophy. Um, yeah. What else is there? So, yeah, the third big common mistake I've seen people make, which is and I mean, this is not very common, but I guess it's worth mentioning because so you have your initial capital, let's say it was $100, and now you've been doing some trades, you made some money, now your total capital is 100 let's say $60. Okay. Now you feel confident, you want to take more risks. Do you risk $160 or do you risk the $60 profit? A lot of new traders will risk the entire $160. And this is what you have to understand the difference between um, the capital you put in to your trading wallet versus the money you can make on profits from your trading wallet. If you taking more risks on the equity from profit is a reasonable decision to make, but you shouldn't add your initial wallet capital with that profit money and then take higher risks, which a lot of initial traders will do because now they have a lot of confidence, they've made some money, and that's okay to have. I've always said having a big ego is more than important in trading, but don't risk your initial capital. Risk, don't get into higher risks trades with your initial capital. Yeah, you can get into higher risks with your new earned profit, but yeah. So yeah, these are the basic three common mistakes I've seen people made in trading in the first term, and I'll talk about more in future videos. I want to make a video on forex trading. I've been postponing that for a while, but yeah, I want to talk about why it's not a good idea to be a forex trader if you don't have a lot of money, and why trading forex with leverage is there's a it, there's more downside than you think. And yeah, we'll talk about that in a future video. Till then, peace.